Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Thursday, the EURUSD pair reversed once again in favor of the US dollar and consolidated below the 50% Fibonacci retracement level at 1.1745. As a result, the pair's decline may continue today toward the next Fibonacci level of 38%, 1.1666. However, everything today will depend on the news background. A close above 1745 level would once again allow bulls to launch attacks toward the 61 corrective level at 1.1824. The wave structure on the hourly chart currently raises no concerns. The latest completed upward wave exceeded the previous peak by only few points, while the new downward wave did not broke the previous peak. Thus, the trend has once again shifted to bullish, although it remains highly unstable, as all recent waves have been roughly equal in size. The temporary ceasefire between Iran and the US supported the bulls, but now, 3 weeks later, it can be said that geopolitical developments are moving toward prolonging the conflict. Therefore, bullish attacks may remain limited or stop entirely. On the 4-hour chart, the pair reversed in favor of the US dollar and began declining toward the 76% corrective level at 1.1617. A rebound from the 1778 level once again supports expectations for further downside movement. The hourly chart is currently more informative due to the weak overall price action. Bulls seized the initiative in the market about a month ago, but are now searching for new growth drivers. No emergent divergences are currently observed on any indicators. And we're starting with pound sterling dollar pair with Din Lao. On the hourly chart, the GBPUSD pair on Thursday, May 7, rebounded from the resistance level of 1.3596, 3620 and declined toward the support level of 3513, 3539. However, price action over the past few days has remained largely sideways. Today, a rebound from the support zone could allow traders to expect a resumption of growth and renewed attempts by the pound to close above 35.96, 36.20. However, much will depend today on the news background. The wave situation remains bullish. The latest completed upward wave broke the previous peak, while the latest downward wave failed to break below the previous low. Geopolitical factors gave bears almost complete control of the market for 2 months, but the geopolitical backdrop has since shifted and now largely supports the bulls. At present, the ceasefire between Iran and the US remains in place, although the situation is moving toward further escalation and prolonged confrontation. It will be difficult for bulls to launch strong attacks in the coming weeks, but there are currently no clear reasons for a retreat either. That's all for today. See you online soon.